And on Thursday, we got a reminder that the United States is not the only country in the world. UMBS were down 6 basis points real early. 10-year was down 5. Both Bank of England and European Central Bank released policy announcements early this morning. Both were as expected in forms of rate hikes. The ECB took a somewhat different approach and pre-committed the next rate hike, another 50 basis points, but said it would reassess after that. That would be like the Fed saying it knows exactly what the terminal rate is and letting the market know when it's coming. Though they've been giving pretty good hits. The ECB said its reinvestments would continue through the end of 2024 and that its balance sheet runoff would be managed to avoid interference with the appropriate monetary policy stance. That's a very weird and confusing comment since the balance sheet runoff is part of the policy stance. We take it to mean that the ECB wants a smaller balance sheet, but it doesn't want to cause too much policy tightening in the pursuit of the goal. As such, it may slow the pace of roll-offs if inflation and growth contract enough. We also got jobless claims. Came in at 183,000 jobless claims on a 2,000 forecast. It was 186 previously. Jobs are holding strong. Unit labor costs came in at 1.1 versus a 1.5 forecast. So we're keeping a lot of jobs, but they are not really super high-paying jobs a lot of times. Powell's comment Wednesday that the disinflation process has started suggested that the aggressive tightening cycle is starting to reduce the pace of price growth, even as it warned of a couple more hikes to come. Positioning in U.S. swaps market assumes the Fed is getting closer to cutting rates as traders bet that economic conditions are likely to keep it from additional rate increases that policymakers still anticipate. I think they're wrong. I think they're going to keep hiking rates until we are right around 2%, and they don't really give a crap what the stock market thinks. The Fed Fund futures currently see 85% chance of another 25 basis point hike in March and 15% handicapping no change at all. The markets see a 30% chance of another 25 basis point hike in the May meeting. The yield curve continues to invert. The 2 to 10 spread is 71 basis points. Non-farm productivity increased 3% in the fourth quarter of 2022. Non-farm productivity has been bad lately, so increase is good. Output increased 3.5% while hours worked rose 0.5%. Labor unit costs rose 1.1% as compensation rose 4.5% and productivity rose 3%. At the end of the day, we ended up exactly flat at 101.75. You can see right there that we actually tested out the 200-day moving average ceiling and it failed, but it also went down below that 101.671 Fibonacci line that was a really tough ceiling for a long time. So that's a very narrow range, but we got a lot of support on both sides. So hopefully there will be some stability. That's really what the market needs right now. Pulte Homes announced fourth quarter earnings with a 20% increase in revenues and another 200 basis point increase in gross margin. I'm going to read that again because we talk about this all the time. Pulte Homes announced fourth quarter earnings with 20% increase in revenues and 200 basis point increase in gross margin. This increase in gross margin means that Pulte hasn't been forced to grant concessions to move the inventory. I am so over these builder sentiment surveys. Revenue is up 20%, 200 basis point increase, and you're sad because you can't build them fast enough. Yeah, orders are down 41%. They're for all of us. Come on, get over it. Double it. That's a mortgage company. Let's get over it. Plus, the home builder ETF is up 29% over the last 3 months. You can take your sentiment and, hey, the Biden administration is planning on releasing a tenant bill of rights, which has been drafted by community organizers and pro-tenant lawyers. It will attempt to find a way to impose a national rent control. Ultimately, the problem is that the housing is in dire shortage, and these measures will do nothing to increase supply. If anything, expropriation of property rights will cause investors to raise the required rate of return and take into account regulatory risk. See Wells Fargo, which means new investment will get harder, not easier. So we got another post from our sponsor at WellThatMakesSense.com. This is all about sales copy. If you're writing anything, if you're writing a blog, even if you're talking into a microphone like I'm doing right now, you got to learn about sales copy and how to construct things that sell. So check it out on www.wellthatmakessense.com.